Hey guys, and welcome back to the S&G Bookkeeping channel. Today's video, we're going to be going over a little bit of a higher level thinking tutorial. Basically, today, I want you guys to fully understand how to analyze your cash flows for your e-commerce business. Now, one of the main reasons we do bookkeeping in general is to make better financial decisions for your e-commerce store. And that starts and most importantly ends with your cash flow statement. It's extremely important to be able to understand how money is coming in and out of your business and overall what the cash flows are looking like and your projections. So today we're going to be looking at exactly what goes into the cash flow statement and what it really means. Before we jump into the tutorial, quick reminder that we are offering a free 2-hour complete personalized walkthrough where we go over anything that you're struggling with in your e-commerce store and your bookkeeping. Now let's jump into the tutorial.
So you're looking at your income or profit and loss statement and you're thinking you had a great year, but you're just a little bit underwhelmed about the cash balance in your bank account. Let me show you the statement of cash flows and how it can explain that discrepancy between your net income and the cash you think you're supposed to have. Once you log into QuickBooks Online, we're in the sample company, Craig's Design and Landscaping. Let's come up here to this top left-hand side and click on Reports. Now, before we go to the statement of cash flows, I just want to look at the profit and loss. If we scroll down, we can see that Craig actually had a net income of about $3,500 for his first year. Not too shabby. Obviously, with some good accounting and bookkeeping help, he'd be able to make the right business decisions to guide him into the right place, make some more money further down the line. But if we go back to the report list and type in statement of cash flows, we can see that I'll just close this to quickly overview what the statement of cash flows actually looks like. It's divided into the operating, investing, and financing activities. Those three give you the net cash increase, or in this case, the decrease for the period. And since this was Craig's first year in business, that decrease in this case actually ties into the cash at the end of the period. They're the same number. But let's look at this operating activities. These activities basically relate to the normal operations of the business, such as sending out invoices, having inventory, other expenses such as depreciation. And if we take a look at financing activities, first I'm going to skip investing for now. These are basically activities where you borrow money, typically from a bank or it could be another company, to finance the purchase of some other things that you need to buy and you currently don't have the cash to do so yourself. But if we take a look at this investing activities, investing typically means investments in property, plant, and equipment. In this case, we have two pieces of equipment, the truck, the original truck, and then the truck number 2. And we can see that they make up this negative $37,000 balance, which contributes to the majority of this decrease of cash in the period. Now, this is not necessarily a bad thing because typically when you're investing in property, plant, and equipment, you're actually setting yourself up for future success if you use that equipment properly. We know that with these investments, hopefully Craig will be much more effective and much more efficient with his customers by having that truck, that ability to use the trucks and perform his services to a higher degree. So what this does mean is that in this period, we did see a decrease in cash, but hopefully by using these assets properly in the future, they will help Craig do a better job of actually getting higher net income in the future, in the following years. So there you go. Hopefully with Craig's investment in his business, particularly with his trucks, his net profit will go up in the following years and cash flow will increase as well. So I hope this answers any questions you might have about the discrepancy between your net income and the cash balance in your bank account. And thank you so much for watching.